Hello and welcome to this webinar entitled Managing Cash Flow. My name is Alan Hupps and I'm a Senior Dairying Development Advisor with Cashflow. Over the past number of months, it has been recognised that in the dairy enterprise, there has been a degree of cost inflation across a number of cost centres. That, coupled with a fall in milk price, has led to a tightening of cash flows on many dairy farms. In order to tackle that problem, farmers are advised to prepare a cash flow going forward for their dairy business. This webinar will give more details on how that can be done. And our speaker for the webinar is Trevor Alcorn, who is the Dairying Development Advisor with Caffrey in Omagh. I trust you find the webinar informative and helpful for your dairy business.
On this podcast, we're going to look at how to do a cash flow and how it may help benefit your business. Introduction. Dairy farm businesses are under financial pressure because of disappointing milk prices and high input costs. For some farms, outgoings may be greater than the income. Cash flow planning allows decisions to be made for the financial stability of the farm business and the mental well-being of the farm family. Should I or do I need to prepare a cash flow for my farm business? Firstly, what is a cash flow? A cash flow is useful for planning. A forecast of money going into and out of a farm business over a specific period of time. It is also useful to help with financial control. It can give you a comparison of actual payments with what was previously expected. How do we prepare a cash flow? Keep the cash flow simple and understandable. It is better that you do it yourself rather than getting it done by an accountant, as you will understand it better. Prepare a monthly estimate of costs predicted over the next 6-month period. The main costs over the winter months will be concentrates, conacre, contractor, last season's fertiliser, finance and sundry costs. If you have to lump various cost centres together, be realistic. Base it on recent or current herd performance, and you will need a baseline to start off from, for example, benchmarking. Forward project milk volumes and feed rates. Consider timing of various payments. Include trade debt and how it will be handled. Include realistic personal drawings and don't forget about likely tax bills. Keep your cash flow projection up to date and current. A computer template will make this much easier as adjustments can be made throughout the winter and a sensitivity analysis can be carried out. So where can I find this information? Firstly, income. Look at last year's milk statements for monthly milk production and then consider how does this compare to last year with regards to cow numbers, expected calvings and current daily yield, etc. Mart remittances for stock sales. Do a single farm payment statement for last year if you haven't received this year's yet. And look at the lodgement book for any miscellaneous lodgements, for example, contract work, calf sales, silage sales, etc. Here we have an example of what a cash flow spreadsheet looks like. The area highlighted in red is the cash in. So here we have a few examples. Cattle sales and culls, heifer sales, calf sales, lamb, sheep sales, milk sales, any subsidies, VAT due, new loan in the bank account, other receipts, contracting, sales, silage, whatever. So next up, we're looking for costs to the farm business. And where can I find these? Start off with the farm VAT book for all sundry costs, merchant statements for concentrate cost and tonnage used, finance agreements for machinery finance repayments, bank statements for charges and monthly loan repayments, and don't forget about any other outstanding debt, whether it be from the merchant, vet, contractor, fuel supplier, etc. Again, we have an example of a cash flow spreadsheet. This time it is for costs or cash out, and the area highlighted in red is some of the costs that may occur. Concentrates in terms of nuts, blend or straits, minerals, purchased forage, fertiliser, seeds and sprays, silage additive, silage covers, veterinary medicine, AI breeding, bedding, dairy chemicals and parlour costs and sundries. These should be put into each month as accurately as you can to make sure that you can predict a proper cash flow budget. Now we have costs again, and this is in terms of overhead costs. So it could be contractor for slurry, fuel for machinery or heat, repairs to machinery and buildings, repairs improvements to land, electricity, telephone and internet, insurance for the farm, water and rates, professional fees, miscellaneous overhead costs, cattle purchases, sheep purchases, conacre, capital expenditure, bank loan repayments including interest, bank overdraft interest, bank charges and any HP and leasing agreements that you may have. Now we come to the bottom of the spreadsheet, and we can see here some other final costs may include wages, drawings and again tax and any other miscellaneous costs that you may have. You will then get a figure for your total costs, and then this will let you see whether or not you have a monthly surplus or deficit. And as you go across each month, you will see how that can vary. And then leading on from that, you will have an opening bank balance and a closing bank balance. So, after completing a cash flow spreadsheet, what will it actually tell me? Here we have a bar graph illustrated with each bar representing the months of the year from January right through to December. Anything in red, which is below the horizontal line, is negative cash flow. And anything in green above the line is positive cash flow. So here you can see in the months of September and October there's positive cash flow. That may have been from animal sales or payment of single farm payment, etc. This is another example of a cash flow graph, slightly different this time in that we have positive cash flow in the month of March and also positive cash flow in the month of September and October. All the other months are negative cash flow. So what are the benefits now that you have your cash flow completed? It will determine if sufficient cash is available to meet current and future liabilities, ascertains when maximum borrowing is required to meet seasonal expenses, identifies when peak borrowing will occur, enables you to be proactive in approaching lender and avoiding costly fees, and it will identify what your break-even milk price is for the next 6 months. It will also ensure any trade debt already built up is included, provides a means of adjusting the timing of payments, shows if it is feasible to continue to expand or develop the farm business at present. In herds closed with TB or expanding, it allows for extra working capital which will be needed to cover additional stock. And it always allows you to look at other options such as going interest only on loans. So what options do I have? Speak to your bank lender about additional borrowing, overdraft for short-term requirements, term loan for longer period. Consider interest-only option on existing loans for an agreed period of time. Review expenditure and question value for money on inputs. Delay planned expenditure. Arrange flexible payment terms with creditors. So in summing up, a cash flow will give you the option of rather than going to the bank with the problem, you go with the solution. Thank you.
Thank you, Trevor, for that informative webinar on cash flows. And just by way of summary, I suppose we'll bring a few points just at this point. A cash flow will show your peak borrowing requirement going forward for your business. It is important to remember that a cash flow will give the details of your bank balance at the end of each month. The peak borrowing requirement may be beyond that just before the milk check enters the bank account. The cash flow can identify bottlenecks within your dairy business where the timing of sales or payments of bills can create difficulties in terms of cash flow for particular months. The timing of those sales or payments can be adjusted in order to avoid that bottleneck. Your cash flow should, of course, take account of additional working capital required either for the expansion of your business or where a herd is closed due to TB. And of course, your cash flow is a live document that can be updated regularly and should be revisited from time to time to compare the actual achieved with what was predicted for that particular month. It is important to remember that you are not alone when preparing a cash flow. There is help available from a number of outside organizations. There will be a number of professionals who are involved already with your dairy business who can help you in terms of preparing a cash flow. And those will include, of course, your accountant and your bank manager. Your Caffrey Dairy Development Advisor can also help in the preparation of a cash flow, and templates are available on the Caffrey website. The Rural Support Helpline, of course, can provide assistance as well. Thank you for listening to this webinar, and I trust you have found it informative.